All right, hello, good evening, everyone. Today we'll be looking into the stock market of the next trend. Okay, what will be happening in the upcoming weeks. Okay, so I'm going to talk about the short term, pretty short term here. It's not going to talk about the next quarter. So last week I've covered, not last week, I think 2 weeks ago, I've covered the next quarter, what will be coming up next. So that's why today I'll share more about the shorter term and you can react to it. So whether probably if you think you want to move in right now for maybe for a longer term investment or maybe for mid-term investment, then you can actually see this here. I will actually share with you whether it's a good time for you to look into it. But of course, not all of it that says that this cannot move in, or maybe you can move in. Some of it is some of the stocks will be react differently in a different market trend. Okay, so before we start, remember to give us a like and also subscribe to our YouTube channel. And if you're watching from Facebook page, follow our page and like us, and you get updated to know when is our next live stream is coming up. Okay, so let's take a look into the current market right now. Is that last 2 weeks I've shared that the sectors that we might want to look into it is the semiconductors, right? So right now the market, what we can see here is wait, where do I see the comments? I want to see the comments here. Where are the comments? Okay, dashboard from the Facebook site. So upcoming, what I find in the market right now is that there are a lot of stocks that are showing sign that they are pushing the price up higher to attract the buyers. So, and all this price push up is not like there will be a midterm price push up. So we might see more of the retrace are coming into it. And usually this will happen. This actually happens in a lot of 1 ringgit and above stocks that they are going into retrace. And those that penny stocks are much more of they're trying to right now at the moment of pushing up the price. So that's why when you're looking into the stock market right now, then you have to be very careful and look into what kind of stocks that you are looking at. Then don't get actually trapped at the high price. Okay, so I'm going to share my screen here and then share some of the stocks, the top active list over here. So in this whole session over here, like I said, the disclaimer part, you can see that it's going down at the bottom here right now, is telling you that this one is just my sharing, okay, and also for overall market. And if let's say you have any stocks that you want to ask me, then I will not be able to answer you here because it's not allowed to actually share it in the public here. So if you have any questions, okay, you can always open a trading account with me, then I can share more. If let's say you want to look into any of the stocks, then I can actually share more with you in that. Okay, how come I don't see the comments from a Facebook side? Okay, so if let's say during this whole session over here you have any question, you can always leave a comment in the comment section box. All right, so let's take a look into it. So far you can see overall market right now, gainers are more, loser are 438, so it's not much of gainer have slightly more. But from what I see, there's a lot of stocks that they actually push up, especially from the top active list. It's more like attracting buyers, pushing up the price. There's not much of retrace here. So the reason why there's not much of retrace is mainly because they are distributing like probably a small amount of shares in hand. So anytime they can actually press the price down lower. So if let's say you're looking into these kind of stocks, then you have to be a bit more careful. All right, but of course in this kind of situation where most of the stocks are, let's say they are going into a retrace or trading at the high side, doesn't mean that you can't trade. If let's say you know how to actually do a day trading, intraday trading, like for myself, let's say I look into these stocks, then probably these stocks, what will actually do like the next trading day is that the price might actually push the price up higher in the morning, So before 11, the price will actually move up higher, which you can call it like a golden trading hours. Then later on, the price start to goes down lower at the end of the day. Why? Because they are attracting buyers by pushing up the price, creating high volume during the golden hour, 9 to 10 or 9 to 11 time. Then they see that the retail investors start to come in, park their price at the lower buy orders, so that they think that they want to buy at a cheaper price. So that's where the big boys actually throw it down to them. So during that period of golden hour, we can actually do some intraday trade there. Okay, but of course you need to know when to enter and also when to exit. Usually what I do is that I will look into the transaction data to see whether they have the intention to continue move up higher or not. So the transaction data wise, if you are interested, okay, so give me let me know in the comment section. Probably the next live stream I'll share a bit more about the transaction data. Okay, so that one wise you need to know, sometimes it move quite fast. So if let's say you want to know more, then probably you can join our next tomorrow. Okay, tomorrow morning we will have an intraday trade demonstration to show you how we do it in the morning, and you will see that kind of transaction data will move up a lot. It will be very fast. Typically, if let's say a big boys, they have the intention to push the price up higher during the intraday, they will clear whatever at the sell price at the certain price. Each price usually they will clear it within 1 second. They clear 1 second clear. They won't clear in the point where 2-3 seconds one time or 2-3 seconds one time. So that is not that is more like showing you, okay, they are showing you intentionally, showing you that, oh, look into this, there's a lot of buyers actually coming in. Okay, so that is one of the way that we look into it. So if you want to find out more, then probably tomorrow you can join into our intraday trade morning session. You'll be at 8:40 a.m. Okay, so what time it ends, not sure yet. It depends. If let's say like yesterday we have done one for our training class for our students, that we did it like within 2 minutes, then we are able to make the profit. If you follow us, you can see from our story that, okay, so making about 200 ringgit, deducting the brokerage fees within 2 minutes after the market open. Yeah, that's good. Okay, so from here, like you can see from the screen over here. Okay, other than that, so that one will be tomorrow's the things that will be happening tomorrow. So you can go to our Facebook page and click the like, and or in YouTube session you can actually click the reminder side. Okay, and come back to this to my screen over here. You can see a lot of stocks are showing a lot of signs that high price, high volume, but then the price is not moving up higher. So these are some of the signs that telling us the retrace might be coming in. All right, so you have to be a bit more careful. Oil and gas wise is typically moving in this kind of situation. Okay, mainly because of the Ukraine war, the oil price are moving up higher. So we do see things like that. Price move up before 11 o'clock, move up higher, and then move sideways throughout the end of the day. And then, but we do see a lot of high volume actually comes in during the day when it's moving sideways, but the price is not moving up higher. Even though there's a high volume actually comes in, but the price not moving up higher. This is actually telling us that this high volume is not by the demand. It can be, probably you can look into the data where the buy percentage or maybe the sell percentage is actually showing like buy rate is more than it. But this can be done in a way where the big boys, they can do a changing hand, which we call it left hand buy from right hand buy from left hand buy from right hand. So that is something that you have to be which we don't see it in the data. Okay, so that's why when we read the market data, we need to understand to find out more details and have a deep understanding into each of the transaction. Okay, we can't just look at the surface and then interpret it directly that way. Okay, so that's what our training course, we will be sharing with a lot of people, our students, how to interpret all this data. Okay, so if let's say you are right now you are getting a bit lost in the stock market, losing confidence in the investing in the stock market, you have tried using technical analysis, or maybe you have tried using fundamental analysis, it still doesn't give you a very good confidence in that, then you should look into our training course, because we will be looking into much more details. It's not about plotting resistance line or what. We are looking into the details of when is the big boys going to throw the price down lower, when is the big boys are going to push the price up higher. Okay, and also like something like this in this chart over here, which I will always ask my students try to avoid this kind of stocks, this kind of transaction pattern, because these are dangerous. If let's say in the market right now you have any of the stocks, you are looking into it, it's something like this, then you have to be very careful. Where you can see that this is very typical changing hand here, where changing hand means, like I said just now, same group of people buying from each other. Just you can see every 4 days later there is a high volume. So there's a high volume here one day, then T0, T1, T2, T3. Okay, T3 high volume, T1, T2, T3, T3 high volume. Okay, T1, T2, and then 3 also high volume. So you can see they keep on doing all this kind of high volume of T3. The reason is because these big boys, they are using limit or maybe margin to actually for their operation, heavily use the limit and also margin in their operation. So that's why to keep that shares in hand, they need to have a very frequent transferring of shares from A to B, B to C, so that they won't get forced sell. So if let's say they get forced selling, then the price will actually go down lower. Okay, so they will actually probably lose some money in the market, because one thing is probably these stocks here might not be very liquid, not enough of buyers, buy orders, or the market maker doesn't have a lot of shares in hand to actually or maybe not many retail investors inside to actually put the buy side there. So if let's say they do a forced selling, throw down the price, then it's gonna be bad. You can see that a lot of price goes down lower. So usually these kind of stocks, when the price going down, it will actually go down like 50% or maybe 50% in a few days. So these are the stock, even though it looks good every time move up higher after the price drop and then move up higher again. So you know that the way that they are doing this kind of operation. So these are the things that we have to avoid getting into it. Okay, so especially right now where we see a lot of stocks are attracting buyers. So I mentioned this beforehand is because I want you guys to get ready beforehand, so that you won't actually get in at the high price, you won't trap at the high side. Okay, so this is one kind of transaction pattern you have to be careful of. I have some over here that I have put it up. So last time they do have this kind of same pattern where the price are pushing up slowly with consistent high volume each day. Yeah, this one here. Okay, so you can see high volume every day, price are pushing up slowly bit by bit every day. There's not much of retrace. So these are the way that I say the kind of operation that they do. So you can see from here, like 90 over cents, it can goes down back to about 40 over cents. Okay, so 50% down from the top, but of course from the down over here you are losing you to go back to 90 over cent is about 100%. So usually these kind of stocks, after this kind of operation, then you can see the price just stay at this point, okay, at the lower point. Then you will find that every now and then there's a high volume, slow price throwdown, high volume, slow price throwdown is distributing their remaining of their shares out into the market. So that's why is when you see this kind of stock operation, this kind of transaction pattern, then you have to be don't get greed or fear of missing out jumping into this. Okay, so it's very dangerous for the operator as well, for the big boys as well. Let's say they're using this kind of method to operate their shares or their stocks. The reason is because if let's say the market is bad, they go through a limit cut So meaning to say that the margin have to cut down, not that much of high, not that high percentage, or they don't offer that much of collateral to the brokers, then they have to cut the limit, then basically they have lesser funds in hand, and then the stock price actually goes down. Okay, so these are the stocks that you have to be very careful of. Okay, these are this kind of transaction pattern. Okay, so be careful of it. All right, so far that we see overall, this is the thing here. If you look into a daily chart, so these are the stocks that showing up. It stopped here. It doesn't move down, but it stay at the same point. So if the big boys, they still have the intention to move up higher, they would the whole operation process of the big boys, how they do it is they will usually accumulate the shares, and then they push up the price, mark up the price. While they are marking up the price, they will distribute majority of their shares on the way up. All right, so that's why the majority of the shares on the way up. So each time they distribute, it's gonna be a lot when they are pushing up the price. Why, let's say 1 million of shares, they need to distribute 80% of it, which is 800 over 1,000 of shares. Then you break into 4 times. Each time you're distributing or taking profit about 200,000. So every time when they throw out 200,000, there will be a price retrace. 200,000, there will be a price retrace. Mark up again, 200,000, the price will retrace again. Then until a certain point, the 80% are being distributed. So left about maybe 200,000 in their hand. So 200,000, if they break into 4 times or so, it will be 50,000 only. So 50,000 at the top, where while they are marking up the price, they are distributing 200,000. So we can see there's a lot of difference. So the 50,000, it might not be able to create a lot of price retrace because they are not throwing down a lot. So that's why you see something like this in this case, where the price are maintaining at the high side. It doesn't have a retrace. So maintaining the price at the high side doesn't have a retrace. It doesn't mean it's a good thing. Okay, I know there's a lot of people, when we look into technical analysis, we will come into some kind of our own explanation and telling and saying like, wow, look at this, the price even though is market is down, but the price is still maintaining at the same point, it's so strong and stuff like that. It might not be that case. All right, so we need to understand how it looks like. So one of the easiest ways, you can look into a 5-minute charts. How do they work? You can see the price are pushing up in the high in the morning, and then maintain a sideways over here. But one thing good is that these stocks over here, while they are moving sideways throughout the whole day, it doesn't show any sign of like very high volume. The price don't really move up higher. Okay, but what we can see here is that price is not moving downwards. Okay, and that is maintaining at the high side. So we might see maybe one more round of price up higher, and then there will be a retrace coming in. So anytime will be soon in the market. Okay, so we can see from the top active list, there are a lot of stocks are showing this kind of sign in different sector, different industry. So this retrace over here, it might not be just a single sector kind of thing. It might be the overall market. So that's why if let's say you're looking into the market right now, you are thinking of moving in, or maybe looking into a longer term, adding more position, then probably you can wait for a while first. Okay, let the price have a little bit retrace. I wouldn't say it's a correction, but it's more like the market will have, most of the stock will have a retrace coming in, because I see before this there are a lot of big funds or the big boys going into the market, accumulating their shares at the bottom. Fund houses, like all those, maybe not fund houses, but we see funds are moving into the market at the bottom. So it is something where the bottom of it is supported by a lot of big funds are going in. So I would say maybe this is where the stop of the price. Okay, then those who will actually move up higher in the future, these big funds are going in, then it will actually move up higher later. Those who are not, then it will just goes down. Okay, because Malaysia market is always like this. All the stocks are always moving one price up and then goes down in the in the midterm. All right, something like things like this. You'll find that Malaysia stock price is always midterm push up and then press it back down lower. Something like this over here that I showed you. Okay, or from here, it's always move in this kind of way, push up and then price down. So that's why I don't really look into, if let's say when you are going for short-term trading or maybe mid-term trading, I don't look into technical analysis to find where is the entry, because technical analysis, if you wait for the technical signal for exit or the change of trend, it will be too late. From the price itself, is already telling us that it's already change of trend. So no point to look into indicators. So it is better that we use this way, where from here you can see this is our previous trade over here. Accumulation is done, price push up, and then housewarming. We call it housewarming is because accumulation is more like a moving house, where they're moving to a new house, moving the shares out, and then when they are ready, they have the housewarming, and that's where we start to move in. Okay, so 30 over cents when we enter, when we look into it, and then when the time that it shows us the exit is about like 48 cents. So this is how you can see it. So you can see 48 over cents is very near to where the price actually start to have a retrace. You can't achieve this kind of maximize the profit using the technical analysis, the traditional technical analysis. Okay, so that's why I know that we all know that the market in Malaysia is always like this. Okay, midterm price up and then that's it, the price actually goes down lower. So of course I say there are some of the stocks in Malaysian market are worth to actually go in for long term, but majority are this. So if let's say we are into trading, then we need to look into this kind of price movement, where you can see price push up half midterm and then the price press it back down lower. Even though you look into some of the stocks where glove market in 2020 time, where a lot of people are talking about, oh, look into this and stuff like that. So I don't find it it's gonna be sustainable with this kind of price up, high up and stuff like that. Of course, during that time you see a lot of fundamental analysts or fundamental coming to support that how they can grow their business and stuff like that. So at the end of the day, price actually goes down lower. Or maybe another stocks that I heard last time is this one, where that time when the price are being pushed up to about this point over here, I hear a lot of uncle aunties in the kopitiam or maybe mama are talking about these stocks and then asking people to look into it. That's where I know that okay, this stock is gonna goes down. Okay, because the price already move up higher at this point, and then those people, they're asking them to look into this for long term. Okay, and if let's say go into a long term, and then from there, right now the price is about like 4 ringgit and 8 cents. So down from that time when I heard it was about like 6 ringgit plus. So basically about 30%, about 30 over percent you are losing if let's say you're looking into this. Of course, they will have a lot of stories coming out to support to tell you why look into this stock, because they are cash rich and stuff like that. One thing again I need to tell you guys is that whether the company, how is the fundamental of it, how is the business, whether is it good or not, is actually have a very little things to do with us a shareholder. Okay, because we are not the person who is managing it. If let's say the company itself, they are cash rich, they won't give us anything. Of course, they will give some dividend. You might earn some dividend from there. But looking at the price down, if let's say the share price actually goes down like 50% or 30%, how many years of dividend you need to collect in order to recover that? Okay, so that's why dividend is not, it shouldn't be in our main objective of investment. The main objective, whether you are fundamental investor or you are long-term, mid-term, short-term is always looking at capital gain. All right. So like for example, you put your money into some of the country, like last time during my time in Australia when I was studying there, Australia is about like 8% or 6% per annum for their interest. Okay, compare if let's say you put into some of the African continent country where they are developing country where they can offer up to about like 10% interest. Where will you put your money in? Of course, you will look into Australia because the currency itself might have the appreciation potential. But if let's say you put into some of the developing country or emerging country, the currency might actually goes down very fast, or you will lose the value there, or even your money will be actually gone. Okay, so that's why at the end of the day, we are still looking at the capital appreciation in the stock market. So I find there's no direct correlation to it from fundamental whether their business is good or not. But of course, when we look into the stock market right now, the report of financial statement can be good, but but all these thing is about human, because human is actually doing managing the company. Human, we make mistakes as well. There are errors as well. So when one error can actually cause the whole business to goes down. Okay, one very serious error. So it might be very good health, very cash rich, but then the next quarter or maybe next few years later, the whole thing might actually change again. So that's why when we look into it, we still look into the big boys. Even though for long-term investment, for myself, if let's say I look into some of the long-term investment myself, I will look for those stocks that the directors or maybe the CEO or the person, the managing directors, they have the intention to increase the value of their shares in order to actually get more acquisition and stuff like that, and allow other big boys like those institutional fund to come in to hold their some of their shares. Then that will be a perfect one, because what is the main factors or the core factors that actually move the price or push the price up higher is always the what you call it, the demand of the share. So share in that company is limited. So if let's say there are more demand, more people are bidding at a higher price, then the price will actually move up higher. All right. So it's not about the business somehow. That's why you see this. You might not agree with me, but if let's say you look into some of the tech company in US market or everywhere, it's crazy about this. Why? Because everything that these funds are going in is based on expectation. Why are they doing that? Why are they not looking back into the fundamental? Why are they having this kind of expectation or creating something that, oh, maybe in the future they will actually make more money from this tech company because they have this kind of innovation, or maybe some of the startup also doing this thing. Okay, so this is capitalism. So we are living in a capitalism economy, so we have to think and invest in a capitalism way, where right now we are in a situation that there's a lot of funds, a lot of money are printed out into the market. So there's too much of money in the market right now. So all of the stocks that, if let's say you're looking into the fundamental, yes, there are fundamentals, a lot of good fundamental stocks in the market, but it's not going to generate that kind. If let's say you look into fundamental, the demand actually move in, the demand of shares actually move into that stocks, and then the stock price actually move up higher. And then when you look back into a fundamental, that it doesn't reflect to it. Because if let's say you look into Coca-Cola or maybe some of the Nestle stocks or consumer stocks, product stocks, you will find that no matter how far you push the price up higher, you can't create a good story to support the price to move up higher. Okay, Coca-Cola is still Coca-Cola, the same old recipe. So you can't say that there's anything innovation into it. But when you put your fund into Apple, into Tesla, into Amazon, all this tech company, then, or maybe like especially right now semiconductor, where everyone is racing towards to come out with the next generation of semiconductor or the chipset. So they can actually have this kind of story to put their fund in. Okay, they expect that maybe this company, they have the technology, or they have the some ideas or innovation that is going to come out in the market, that it will bring a boom into the market and they will capture a lot of market shares there. Then that's where they can attract more funds to go in, then to push up the stock price. Okay, so but in when you look in back into Coca-Cola, still Coca-Cola, you can't change that. All right, so that is how the whole market is working right now. So you have to understand this. This is the fact of it. Okay, about the market. All right, so yep, I think basically right now in the market, you know what is going on, how is the bigger picture of the market it works like right now, and you know that smaller parts where most of the stocks will be going into a retrace. So what you need to do later on, then you have to be careful. Don't just rush in because someone actually tell you like, oh, look into this and stuff like that. The story of asking you to buy a stocks, there's always a lot of a lot of reason to ask you to buy a stocks. Okay, the most common one is always like rumors saying that that the guy who share with you, that he say like, oh, I know these people in this company, they say blah blah blah, the price is going to move up in double in 2 or 3 months time. And then when you hear that, then after that, they're going to come in with the fundamental and tells you like, oh, because they have a good quarterly report, the result in the previous quarter, and then they have this kind of make profit from it. And then later on, they're going to announce the news that they have some projects that is coming in. Then it will actually move up the price. Okay, so if you are a person that you understand really well about the stock market, you know that all this news or all this quarterly or the financial news, it doesn't really have a direct impact into the price, the stock price. So you will find that it doesn't make sense. Okay, unless you say like when this news actually comes in, and then you have a new investor coming in to this company to actually to support the next project coming in, then there might be a price increase there, because new investor comes in and then there creates a demand in the price, in the shares, so the stock price will actually move up higher. Okay, but of course, if new investor comes in, when they buy your shares, they don't want to buy at a high price, they want to buy at a lower price, and you want to sell at a higher price. So that's why they will negotiate something in between, if let's say the deal is done. All right, so that's why you heard about all this, then is something that is not right. Okay, unless the first one, the rumors, is true. Okay, they're gonna push the price up in 2 to 3 months time. But think of it, if let's say it's an insider that tells you this, will they share this out to the public, or they will keep it to themselves and then wait until a point where they want to take profit, then only they share it out into the public? Of course, they want to take profit. So who are their buyer? Basically, are the retail investor. So if let's say they really want to push the price up higher, they will not let you know in advance. They will let you know later. So basically, what we are looking, or what we are reading, or what we are listening in the market right now is because they want us to listen. So that's why I don't listen to all these news or maybe the rumors about it. So I prefer to believe into the transaction data and look into the transaction price to see what is their intention. Okay, so those things won't tell lie. If you are the big boys, you want to push the price up higher, then you will do this kind of transaction that will push the price up higher. If let's say you want to throw the price down lower, you will create some kind of transaction to actually attract the buyers to come in. Do that kind of transaction that it shows you intentionally showing you that there's a lot of buyers are coming in, so you actually fall into it, you actually jump into it. Okay, so that's why all the the story that they tell us about this stocks, whether it can move up higher or not, it doesn't make sense in any way. Okay, that from the understanding of how the stock market works. So that's why if you hear any of the rumors in the markets, I would say most of the time, okay, 95% of the time, I would just ignore it. Okay, maybe some of it I will look into it. Most of it I'll look into it. If let's say it's good, then I'll just look into it. But probably not 95% or 98%, only 2% of the stocks that I will see, oh, okay, this is good, then can look into it. Okay, so that's why never believe in all these rumors and stuff like that. Okay, so yeah, especially right now, if let's say the price are going to have a retrace, then you have to be extra careful of all these rumors. Then a lot of people are coming out to tell you this, but most of the stocks are at the lower point, so I don't think they will create rumors to attract the buyers to come in. So it's just a short term. So probably at the end of the year, then probably you hear a lot of all these rumors are coming out. Okay. Personally, I'm looking at the those semiconductor stocks, but right now same thing, they are going into a retrace. So we just have to wait and see when is the right time they want to push the price up higher. Okay. All right. So in general, overall, be be more careful about it. Don't just jump in blindly and then get yourself trapped at the high side. So watch it first. Probably like all this like ringgit and above stocks, then probably like a week or maybe next week, then they will show some sign that they want to push the price up higher, maybe. Okay. So the penny stocks are right now is moving up higher, so it's more towards that they will create a retrace soon. Okay, so it's always like 1 ringgit move up, and then that's the penny stock will actually start to move down lower. All right. So yep, that's my sharing over here. Thank you for watching this, and let's see any questions that you want to ask. You can write it down in the comment section. So while you're writing down the comment section, I would like to share with you guys is, please give us a like, okay, again, and share this out to more of your friends, or maybe some of the page or some of the group. So help us to reach out to more people. So if you to know more about this kind of information that and the knowledge that we have to use in the stock market. Right now in the market is because there's a lot of people, you know this, you know the big boys in the market, but you do not know how to look into it. Okay, so we have the way to look into it, to look into the transaction data, how the big boys actually works. So we have our training course. It will be on the next month, the next intake, May intake. So it's a 6-month training course to help you to learn all about this. So the whole training course, you are not going to learn things the same as the technical analysis. So it's more details of all those price movement, transaction movement. All right. So do let us know if let's say you want to drop us a PM if let's say you want to find out more about that. So we do have a monthly subscription as well. So you can subscribe by month. So first month after you attend the intake, and then you find that okay, you want to stop for it, and then you don't want to watch anymore, then you can stop. Okay, so you just you just subscribe for 1 month. So maybe later on you'll find that you have no time to look into it, then you can pause for it and then go for next month, and then you subscribe again. Okay. All right. So I see no questions coming in, so I'll just end the session here today. So if let's say you want to know more about intraday trading, so remember to join into our live stream tomorrow for the intraday trading for Malaysian market. And then next week, every Tuesday, we will have intraday trading for US market as well, if let's say you want to look into the US market side. Okay, so leave a comment if you want this to keep going for every week, then we do it for every week. All right, thank you very much. See you guys again next week.